Picture this, not gently, but like a slap to the mind. The world is drunk on optimism. Stocks are ripping upward like rockets breaking gravity. Every talking head on TV is chanting the same hypnotic mantra. This time is different. But beneath that glittering surface, there's a tremor. Tiny at first, then louder, then impossible to ignore. And as 2026 approaches, that tremor becomes a crack, and that crack becomes a fault line. Not a full-scale implosion, not yet. But a shift A snap. A sudden, violent correction that sends a shockwave through the global financial bloodstream. Screens turn red, markets choke, fear spreads faster than truth. And while the world freezes, while journalists stumble for explanations, while retail investors watch their portfolios bleed, you're already moving. Not because you're lucky, not because you're reckless, but because you know something they don't. Every crash in history has been a disguise. Panic on the outside, opportunity at the core. And the people who become wealthy, generationally wealthy, aren't the ones who avoid the storm. They're the ones who understand how to use it. So let me ask you something uncomfortable. What if the downturn everyone is whispering about isn't the end of your financial story, but the exact chapter where everything finally breaks in your favor? Sounds upside down, sounds bold, sounds insane. Good. Because the truth is, the setup is already in motion. Valuations today are so inflated that even veteran investors are getting deja vu, flashbacks to the dot-com bubble, to 2008, to every euphoric, frothy moment that came before a historic correction. Look around. The S&P is brushing against valuations we haven't seen in decades. The eye-driven hype has turned average companies into fantasy-priced unicorns. Debt, government, corporate, consumer, is stacking higher than skyscrapers. And central banks? They've already burned through most of their magic tricks. This isn't random. This is the pressure buildup before the earthquake. But here's the plot twist. Most people see danger. The minority, the wealthy minorities, sees positioning. Because when markets break, something strange happens. Assets that were previously untouchable suddenly fall into reach. Fear becomes the ruling emotion. Not logic, not research. Fear. People sell because they're scared, not because it's smart. And when the dust eventually settles, when prices hit irrational lows and confidence is nowhere to be found, the people holding two weapons emerge as winners: cash and clarity. Because in chaos, premium assets go on clearance. Blue chip companies, prime real estate, future-changing ideas, innovation nobody cared about until it suddenly mattered. If you have the courage and the plan to strike while everyone else is running, that's when fortunes are made. So let's make this real. If 2026 unfolds the way the early signals suggest, there are 3 strategic moves that could change everything. Not predictions, preparations. Step 1, identify the weak links, the assets living on hype, leverage, and fantasy. Every bubble bursts the loudest sectors first. Overpriced tech, momentum-driven names, companies with zero earnings and golden promises, these are the first dominoes. Step 2, build liquidity like it's oxygen. Because when the market is drowning in fear, the only buyers who win are the ones holding dry powder, cash you've already mentally committed to use when everyone else freezes. Step 3, decide now what you want to own later, not during the chaos because emotion kills clarity. You choose now: the strong businesses, the real estate with demographic tailwinds, the distressed opportunities that only appear when pain hits maximum volume. Because when the crowd runs from fire, wealth is hidden in the ashes. In 2026, it might be the year the average investor breaks, or it could be the year you build the foundation of a legacy. Now let's paint the picture of how this actually plays out. Not in theory, but in a real-world, boots-on-the-ground scenario. Imagine the calendar flips to 2026. The hype machine is still roaring. IEVS, robotics, automation. Every podcast, every CNBC segment, every TIKTOK finance guru is claiming the same thing. We're entering a new golden age. Retail money continues flooding into index funds like it's guaranteed profit institutions. Meanwhile, are starting to look uneasy, quietly trimming positions, not because they're scared, but because they're informed. Then it happens. Not an asteroid, not a world-ending catastrophe, just a spark. One disappointing earnings season from a tech giant, one ugly inflation report, one geopolitical shock nobody saw coming. Just like that, momentum flips. The same tickers that everyone worshipped fall 30%, 40%, 50%. Credit markets tighten like a vice. Companies drowning in leverage get exposed. Liquidity evaporates. Fear spreads faster than truth. Charts bleed. Headlines scream. And people panic. But you've been waiting for this moment like a sniper waits for the perfect shot. While others dump their positions in terror, you deploy the cash you protected, not recklessly, strategically. You scoop up great companies that were temporarily dragged underwater by chaos. You secure corporate bonds at discounts nobody thought possible 6 months ago. Maybe you even grab real estate, not because you're guessing, but because someone else was forced to sell. And what happens next? Time passes, slowly at first, then suddenly. The market finds a floor, not because everyone feels safe, but because value becomes undeniable. The noise fades, confidence returns, and the strongest assets lead the rebound. And as portfolios recover, yours doesn't just recover, it multiplies. Because while the world reacted emotionally, you acted with intention. But let's be brutally honest, not everything bounces back. Some companies vanish permanently. Some speculative plays never see daylight again. That's why this strategy isn't about gambling. It's about discipline. It's about thinking like a value investor, someone who sees not just what a company is worth today, but what it can become when the smoke clears. Flashback to 2008. The bold who accumulated bank stocks during peak fear later made life-changing returns flashback to 2020. Investors who bought airlines, hotels, travel companies during lockdowns saw massive rebounds once the world reopened. History repeats, not perfectly, but predictably. And this time, the opportunity could expand beyond just equities. A correction this deep could create ripple effects across real estate commodities, private credit, emerging markets, distressed assets, safe havens like gold or treasury products. Even global regulators are hinting at instability. The Financial Stability Board literally warned that valuations are disconnected from reality and vulnerabilities are rising. If commodities drop, you could see entire markets reset. Energy, mining, resource-heavy countries, and the debt tied to them. Translation? Opportunities won't appear in just one corner. They'll erupt across the entire financial map. So how do you position yourself like a strategist, not a spectator? 3 moves, simple but powerful. 1. Allocate defensively now. Cash, bonds, gold, not as an escape, but as ammunition. 2. Build your buy list. 3 to 5 assets you believe in long term, and the exact price where you would strike. No emotion, no hesitation. Rules greater than feelings. 3. Reduce exposure to weak assets. If something is built on hype instead of fundamentals, history is not kind. Because, and Warren Buffett wasn't joking, when the tide goes out, you see who's been swimming naked. Now, why talk about this before the storm? Because right now, the majority still believes in unlimited upside. Some analysts are forecasting the S&P hitting 9,000, while in the same sentence admitting the current market feels like a beautiful bubble. And here's the rule. The stronger the collective belief in endless growth, the harder the collapse when reality returns. So here's what this means for you. Practically, decide what you want to own before the crowd panics. Write it down, build liquidity, protect your emotions. And above all, stay mentally flexible. You're not trying to time the exact day the crash begins. You're preparing to act when the world freezes. Because the moment the herd runs, the contrarian becomes king. A crash isn't just a threat. It can be a turning point. The moment the financial system resets and the fastest wealth creation window opens for those who are ready. Chaos doesn't destroy wealth, it transfers it. So when the noise gets loud, when fear takes the wheel, when everyone else is backing away, that's when the prepared take their shot, and that could be the moment you step into the right. If this hit you differently, if it challenged how you think, then this is where your next move matters. Tap the like button so the algorithm knows this message shouldn't be ignored. Subscribe, because you're not here for surface-level finance advice. You're here to think, to prepare, and to play the game like the top 1%.